Welcome back everyone to the videos related to goods and services tax course. I hope you have gone through the video about input tax credit concept. So today we will be discussing on three main topics regarding GST, that is the features, the benefits and the computation of intrastate supply of goods and services. So let's start with the features of GST. The first feature of GST or the goods and services tax is a value added tax. GST is considered as the tax payment on the value addition of goods or services. So in the previous video, I explained to you what is the calculation of indirect tax to be paid to the government in both the GST regime and also the regime before the implementation of GST. So at the time of what tax was paid upon the tax, that is the tax cascading effect, and after the implementation of GST, the tax was charged only upon the value addition on the good or the service. So, GST is a tax which is levied upon on the value addition of a good or service at the time of manufacture, sale, or consumption of them. Number two, there is no double taxation. That is, the cascading effect is eliminated completely because GST is taxed on the value added. Feature number three, the input tax credit. I hope you remember the concept of input tax credit. It is the credit that is gained by each supplier that is calculated by output tax minus input tax. Output tax is the tax collected on the sale and input tax is the tax given on the purchase of a particular product or a good or a service. So continuous and comprehensive chain of input tax credit from the producer's level up to the retailer's level is possible in the case of GST. This is one of the most important feature of GST. And there is wider base. GST has a wider tax base and it covers majority of the goods and services in it. And some goods and some services are not included in the purview of GST, of which we will discuss in the coming slides. GST is a unified tax system. One tax, one market, one nation. That was the motto of the implementation of GST. So many indirect taxes were subsumed in the ambit of GST and that created one economic India. The final burden of this GST is charged by the retailer as benefits of input tax credit on the consumers. The final burden falls on the consumers every time. Here the retailers get an advantage of input tax credit which is available to them in the previous stages. So the final burden always falls on the consumers. GST is a destination based consumption tax and the revenue of SGST accrues to the consuming states. So destination based consumption tax means GST is considered to be a consumption tax or consumption based tax. So before moving to the concept of consumption based tax, let's understand what was the situation in India before the implementation of GST. So earlier, the state in which the taxable event occurs had been collecting the tax on the sale. That means the manufacturing states were able to collect huge amount of tax since all the goods were sold at such states. So the manufacturing states were collecting the tax. After the introduction of GST, the tax collected is shared between the center and the state government to which the supply occurs or where the consumer resides. So therefore GST is described as a consumption based tax or in other words a destination based tax. So before GST implementation, tax were collected from the manufacturing states, but after the implementation of GST, the tax is collected from the consuming state. Okay, I hope this concept is clear to you. That is consumption based tax. The tax collected are shared between the sender and the state where the consumer resides. It is also known as destination based tax. Okay. The next feature is regarding the method of levy and collection of tax. So levy means charging. Levy the tax means to charge the tax. So after the implementation of GST, the invention of ICT or the intervention of ICT, that is the information and communication technology, enabled the speedy, transparent and error-free administration in the case of GST system. Everything, every documentation, every registration, each and every information regarding GST is provided through information and communication technology. The filing of the returns is done through online process. So there is no paper-based work involved in GST system. The next one is regarding the compensation for 5 years. So in the previous point regarding revenue, I told you that earlier before the introduction of GST, the state in which the taxable event occurred had been collecting the tax on sale. That means the manufacturing states were collecting the taxes and they are likely to face a sharp decline in tax revenue after the GST implementation because they are not getting any revenue from the taxes since GST is a destination based tax or consumption based tax. So, in order to avoid such a situation and also to compensate the state which have to bear the losses due to GST implementation, a Goods and Services Tax Compensation Act was passed. So, according to this act, the entire loss of any state due to implementation of GST will be compensated for a period of 5 years. That means 5 years from 1st July 2017. So, after this 5 years, the government assumes that after this 5 years, it is expected that all the states will be making gain so that the compensation mechanism need not be required. So that is the concept regarding compensation for 5 years. To compensate the loss incurred by the manufacturing states, they were allowed a compensation for 5 years. Okay. Then one of the feature of GST is the system of self-assessment. So assessment means it is regarding assessing the transactions or assessing oneself, assessing a registered person. So self-assessment is possible by the registered person in the case of system of GST. However, the audit and inspection of business place of registered person will be conducted in order to verify the compliance of provisions of law. But self-assessment is possible in the case of a registered person by himself, by self. So I told you some items, some products and some services are outside the purview of GST. So let's see which are all these. First one is alcohol for consumption. And the power to levy tax on alcohol for consumption is by the state government. For example, in Kerala, the power to levy tax on alcohol is with the state of Kerala. Okay. And second one is regarding the petroleum products, that is crude oil, diesel, petrol, etc. And it is decided by the GST Council and they have not yet reached a decision as to who will levy tax upon it. Okay, so GST Council is yet to decide. Then third one is regarding tobacco. In case of tobacco, part of GST, but power to levy tax is in the hands of the central government. And four is the entertainment tax levied by the local bodies, and the power to levy this tax, this entertainment tax, falls in the hands of the local bodies. So these four items are outside the purview of GST system. After discussing the features and the items that are outside the GST system, now let's move quickly through the benefits of GST, which includes some of the features of GST also. So the first benefit is creation of a unified national market. So one tax system, one indirect tax system was implemented in India, which created a unified national market, which attracted, and they claim, the people who implemented the GST claim that it attracted more investors into the Indian market, and it reduces the tax cascading effect, that is tax on tax effect, and also it eliminates the double taxation, which is similar to the cascading effect. And next one is regarding the automated process to reduce the human interface. I already pointed out that more ICT intervention was used in GST system. So automated process is more than the human interface. Next is regarding the economic activity. So it increased the economic activity and investment in the country of India, as I pointed out earlier. I hope you have heard about the concept or the idea of Make in India initiative. So GST implementation has boosted the Make in India initiative in the case of country of India. Then widened the tax base. Almost all the goods and services are under the purview of GST. Then single tax to replace multiplies levies. That is, GST has subsumed a number of indirect taxes in India and reduced cost of compliances for taxpayers. The taxpayers need to incur a very minimal cost for the compliances of tax. Generation of more employment opportunities. So with regard to commerce students, this may be an attractive benefit, the generation of more employment opportunity. So people can be GST practitioners, and nowadays their new courses like GST Tally have been started. So these all created a more employment opportunity in the society when GST was implemented. So now we will discuss about the intrastate supply. Before that, let's recall what was the calculation of tax payable under GST system and under VAT system, which we discussed in the previous video. So under the VAT system, the cost plus the tax amount was taken as the total, and the total amount was added up by the value added amount, value addition. But in the case of GST, only the cost amount was added by the value addition amount, not the total cost. So under GST, what happens? There is no tax on tax effect, or tax cascading effect is eliminated completely. So let's say a very simple example where we assume that the CGST rate is 9% and the SGST rate is 9% here. That is 18% of GST rate. Okay. So in the case of local supply of goods or services, the supplier would charge dual GST, that is CGST and SGST. So I hope you are clear about CGST and SGST. CGST means the Central Goods and Services Tax, and SGST means the State Goods and Services Tax. So now we are discussing about the calculation of GST and how input tax credit is availed by the supplier in the case of intra-state supply, that is within the state. Okay. So here CGST and SGST, it came into effect because of the concurrent jurisdiction, because both the central government and state government, they concurrently, or the system of GST falls under the concurrent list of the constitution. Okay, so let's see the example. The situation is the supply of goods or services by Mr. A to Mr. B. So Mr. A supplies goods to Mr. B. Okay, so the value charged for the supply is rupees 10,000, and I already mentioned we assume that CGST is 9 and SGST is 9%. So 9% of 10,000, we have 900 rupees as CGST and 900 rupees as SGST. So the total price charged by A from B is 11,800 rupees. So Mr. B needs to pay 11,800 rupees to Mr. A and purchase the goods from Mr. A. Okay. Now, the CGST and SGST charged on B for supply of goods and services will be remitted by A. So, A collects an amount that is 11,800, which consists of the tax, that is rupees 1,800 as tax, of which 900 is to be remitted to central government and 900 is to be remitted to the state government in the form of the respective taxes. Okay. So the CGST and SGST will be remitted by Mr. A to the appropriate account of the central and state government respectively. So A is the first stage supplier of goods or services. For example, let's imagine or let's take for instance A is the supplier of raw materials. Okay, so he supplies the raw materials. So he is the first stage supplier of goods or services and he do not have the credit of SGST, CGST or IGST. Okay. So this is the first situation where A supplies goods or services to B. Now let's see. The second stage is B, who bought goods and services from A, supplies the same goods and services after value addition to Mr. C. Okay, so supply is done by B to C after a value addition of 20%. So 10,000 rupees valued good is added to 20%, that amounts to rupees 12,000. So let's take the CGST and SGST rate is 9% and let's take the tax amount. It amounts to 1,800 rupees each and the total price charged by Mr. B from Mr. C is 14,160 rupees. Okay. So this is the case of GST. If it was not the case of GST, on what amount would we have charged the tax? Try to answer on what amount we would have charged tax under indirect tax regime. That is different from what GST charging is. Okay. So under GST charging 10,000 plus the value addition amount is this 12,000. But if it was in the other case, this amount 11,800 amount will be added by the value addition and upon which the tax amount will be added again. That was tax on tax. Okay. So Mr. B needs to pay 14,160 rupees to Mr. B. So let's see. Mr. B paid 11,800 rupees as input tax to Mr. A and B received rupees 14,160 rupees as the sales price. Okay. So let's see now. B will avail the credit of CGST and SGST paid by him on the purchase of goods and will utilize such credit for being set off against CGST and SGST payable on the supply of goods or services made by him to C. Don't worry, I'll explain it. So let's look into this. Computation of CGST or SGST payable by B to government. So the question is like how much amount of tax should be payable by Mr. B to the government. Okay. So when Mr. B sold goods to Mr. C, he collected a tax amount of 1,080. And when he purchased goods from Mr. A, he paid a tax of rupees 900. So the difference between the output tax and the input tax is the GST payable to the central government. So he gets a credit of rupees 900. This is how input tax credit system works. Same is in the case of SGST. SGST payable is 1,080. The credit of SGST is 900. So SGST payable by him to the state government is rupees 180. Okay, I hope this is clear to you. So this is a statement of revenue earned by the central and the state government. Central government gets 900 and 180 from Mr. B and C. Then state government also gets rupees 900 and 180 from B and C. So I hope this topic is clear to you regarding features of GST, regarding benefits of GST, and the calculation of GST, and the concept of input tax credit. So let's meet tomorrow with a new concept. Thank you.